All right, what is going on, everybody? Today I'm going to be walking you guys through the toughest green day of my career. It's a very, very complicated day. I'm up $3,000 on Bitcoin. I'm up almost $2,000 on the NASDAQ, but it did not come easy by any means, not even close. It was a very tough day, specifically mentally, all right? And you have to understand that, not every day is going to be easy. Some days are going to test you, all right? And that's something that looks like this. What you're looking at right now is one of the rarest forms of PA. This, in fact, is about a 3% chance of this phenomenon taking place. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive lower highs in the market as we're in a downtrend. 3% chance of that happening. And the thing is, I have zero edge shorting in a market like this. I have zero data to back it that I'm gonna, should really put my live funds on that type of stuff. So what do? I'm playing defense, not offense. There's times where you need to play defense more so than offense. And when I saw this opportunity in the market, that was a no-brainer to take it immediately. Let me walk you guys through why this was a light bulb moment for me and something that I put my live funds on. Let's back out to the hourly chart. It always starts on the higher time frame. All right, so what I'm looking at is the fact that we have a discount placed into the market. All I'm doing is taking the low to the high, and you can see here, we dive down into this red shaded area below 50%, hits that, but what's really key here is it closes several times above 50%. That's a really good kind of nod to bullish price action, all right? The higher time frame key level that I was utilizing was this discount hourly imbalance, all right? You can see we came down, tapped that, but here is the key. We had an hourly wick. And take a look what happens before we blast off. This is the wick theory that I created. I teach it every single day. Here we go. Here's midpoint. But the highest quality point for longs is going to be a tap down into 25% of the upper range of the wick and leaving 50% open. That is one of the strongest bullish signatures you will ever see in price, which is what I'm overviewing right now. All right, so 25% of the wick was delivered right here after tapping into our high time frame key level. We're in a discount, we close at 50%. Now what I do is scale down to the lower time frames. All right, so starting at the 5-minute, once again at this point the draw on the quarterly is ridiculously obvious, right? We have the most ridiculous trend line stack ups in the world. It is a less than 1% chance that you'll see something like this stay open and never be tagged. Okay, so by me knowing that, I'm watching price. I can see that it taps down to 25% with the retrace after something very specific takes place. This run up here is very key. This is what I deem as a light bulb displacement in price. Now, why is that? What's taking place is we run up, we create a 5-minute fair value gap, but as we're doing that, right, when we create this light bulb displacement, it is yet to tag the Model 3 target. And what did it do? It disregarded multiple opposing arrays in the form of fair value gap, another fair value gap here, boom. These series of up close candles, you're going to take the low to the high, to the midpoint, and you can see we closed above the midpoint of these opposing up candles. Another very strong bullish signature in price. Now that I have everything that I need, I scale down to the 1-minute chart to find my entry, and this is where things were complicated. Once again, as if we didn't have enough, ever since I took my entry right here, this was the first entry, boom, convicted, set my stop loss, set my target to the Model 3 target, and I ride it out. However, what made this so complicated on the mental? I was very convicted. I was assertive. I used multiple accounts. But we generated another downward trend line, right? And we tapped my stop loss to the tick on one of my accounts. The other account, it missed the stop loss by a few ticks and ran up. So what do I do at this point? I wait. I'm not losing my conviction, right? I wait for the next displacement, which was right here. Okay, and as soon as I see that, I'm holding my conviction. I've seen this way too many times to just be passive on it, right? I'm re-entering immediately. I actually re-entered on full risk, okay, meaning I took 2 NASDAQ contracts, rode it up to the high, and ultimately, after an insane day, I hit take profit. Now, I was only up a couple $1,000 utilizing 3 accounts. I got stopped out to the tick here, and I took a loss earlier, longing the 1050 to 1110 macro. This was minus $400. And then here we had another minus $400. The trades that I took to take profit more than made up for that. And it just goes to show why holding your conviction is king. All right. Don't try to fade your own bias. Trust your model. Execute the model. And these are the days that test you. It's going to test your discipline. It's going to test your patience. It's going to test you as a whole and your character. And these are the days you have to remind yourself why you're here. Every single day, you're not going to have a 100% win rate. You're not going to get it correct every single time. You're going to get stopped out to the tick sometimes, and it reverses in your direction. Things like that are a part of the journey, and the sooner you accept it, the easier profitability will come to you, all right? No one successful trader, right, made it overnight. You're going to have things that test you. You're going to learn, especially on days like this, what it means to be a profitable, consistent trader. Not a one-hit wonder that gets results and then falls off the next, couple months. Consistency. That is what I teach. That is what I preach. So classic textbook model. Every single thing that we needed. Obviously, we had the macro here. I'm not going to cover that, but obviously that added to it. All right. Everything was there. Every single box was checked for our model number 3. Very classic, very textbook, but it came with a mental price tag. Right? It's going to cost a little bit of your mental capital. So in conclusion, trading is just simply not about being perfect every single time, right? What trading is about is how you respond after short-term uncertainty, okay? Do you let the caveman state of your mind take over, or do you suppress it? Are you disciplined? Do you accept losses, okay? Do you accept things like it hits your stop loss of the tick and then runs without you, right? All of these short-term adversities, all these short-term setbacks, every single loss is just another lesson forging you into the trader that you're always meant to be. It's always a trial and error. I'm 6 years into this business, okay, and I can't tell you how many times I failed, how many times I fell flat on my face, how many times I lost in front of a crowd. All this stuff built me into who I am now. I consistently pay my bills in these markets by accepting loss as a good thing. As soon as I started accepting loss as a good thing and changed my mindset and rewired completely surrounding failure, that is what truly morphs me into someone that pays my bills consistently through this skill set. And that's the truth, guys. See you in the next one.